Good afternoon, everyone, and welcome back. This is Elite Trading Analysis with a quick market update for today, January 12th. Today, we got CPI data. Inflation rate year over year came lower than expected, so 6.5 instead of the 7.1 of the previous one, aligned with expectations. And core inflation rate also lower than before, 5.7 instead of the 6% of the previous one. Both readings were as expected from analysts in Wall Street, but take a look at this. Inflation rate month over month decreased minus 0.1 instead of the 0 expected and slightly below of the 0.1% of the previous one. Those are good news, but be careful. Core inflation rate month over month 0.3% instead of the 0.2% of the previous one, aligned with expectations. Core inflation rate month over month actually increased. This is for CPI. Jobless claims also came out at 8:30. Initial jobless claims came lower than the previous one. This is bad news. We want jobless claims to go higher, and continuing jobless claims also came lower than expected. Both readings were bad. Jobless claims were bad, and inflation rate, even though the general inflation year over year is going down, is not lower inflation, is not deflation minus, it's just not increasing as before, but core inflation rate came higher than expected. So let's take a look to the actual CPI report. This is the CPI report from the Bureau of Labor Statistics, BLS. So this is the last column, December 2022. So all items, as you can see, minus 0.1. This is the actual decrease from inflation rate minus 0.1. This is the minus 0.1, but this is the general. Let's take a look. This is including gasoline, fuel, energy. So energy is crude oil, fuel is minus 16%, so actually being destroyed, minus 9% for gasoline, in energy in general, minus 9%. This is the general inflation, and this is actually good. But however, let's take a look to the core inflation. Core inflation means all items less food and energy. The volatility of food and energy are taken out. So we are focusing on the core. This is the 0.3% that we saw here. So actually, if we go to the services, let's see how they changed from 0.4 in November to 0.5 in energy. But inside energy, we have shelter, rent, home, 0.6 increased to 0.8. This is really bad. Transportation from negative, and also medical services from negative to positive, 0.2 and 0.1. This is actually really bad. So analysts were focusing on shelter and services. This is bad. Don't get me wrong, inflation year over year and general inflation is not increasing as quickly as before, but actually core services are going up. So don't be confused. The media is trying to spread the breakdown. December, they are going, okay, we have December 6.5 annual basis. The inflation is going down. Everything is fine. So be careful with what you read and what kind of message the mainstream media are providing. Just do your own research. This is the actual report, and I'm trying to be factual. These are facts. Core inflation is going up. It's not decreasing. It's just going up. It's continuing going up. We have sticky inflation in shelter and in services, and actually also in food at home. Look at this. We are still going higher in food at home. 0.5 lower than the November, but it's going up also. So if you take out the big decrease, the big pullbacks that we are seeing in energy, inflation is not going anywhere. We have sticky inflation. Be careful with that, because mainstream media is trying to provide different approach. So look at this, consumer prices fell 0.1 in December, reflecting a slowdown in inflation. Yes, this is true, but this is not all the truth. You have to do your own research and go to the details, and the details provide you complete different picture. So my opinion is that we cannot be happy with these inflation readings in the core inflation and also with these initial jobless claims. How the market reacted? Well, market looks like it's thinking the same. We started, this is where the CPI came out, we dropped heavily and we did a quick reversal. So this was just already a mixed sentiment, and we were trying to flag, look at this triangle, and we broke out. But look at this red zone that I have up here is this zone. Let me show you. It's this zone. This zone that we held in early November, that was acting as support after this big push after CPI, we rejected it 3 times. So previous support is now resistance. Look at this. We are just there. Markets are not that bullish. Markets should be, if CPI is actually good, if we are moving forward, I mean, markets should not be doing this kind of choppiness. More than that, we lost this support and we go lower. This level, this was a clear head and shoulders that you can see here. So this shoulder and this pivot of this ascending support that was broken, this is actually resistance throughout the day. So be careful to this level, 11,520 on the Nasdaq. We are just chopping around. We are slightly green. Microsoft super strong due to other kind of news. Microsoft is putting a lot of money into the artificial intelligence, is willing to buy a company that is focusing on artificial intelligence to boost their engine of Bing, the Bing engine, the search engine. So this Microsoft is bullish due to another kind of reasons. It's the only thing that is super strong apart from Meta. But Tesla is red, Apple is red, Google is red, Amazon is slightly green. We are seeing more or less a little bit of a push right now, but be careful with this. This is not the price action you want to see after a supposedly quote-unquote good CPI numbers. You want to see straight up or straight down. You want to see trend. And the trend is not even close to be clear. So let's take a look to the sector funds to see if we can extract some kind of clarification. Let's see if we can find out some clues. And look at this. Energy was the one item that was actually decreasing in the CPI. Energy was minus 16. Minus 4, minus 16 was crude oil. So in general, energy, natural gas, gasoline, crude oil, all those were demolished in December. Prices went, we already saw that at the pump and also in the markets. But take a look, energy is going up. Why energy is going up when CPI inflation is supposed to be good? Because actually we have a problem. Let's go back and check this sentence. Energy. The index for all items less food and energy rose 0.3% in December. This is the actual core CPI. Following 0.2% increase in November. The shelter index was the dominant factor in the monthly increase in the index for all items less food and energy, while other components were a mix. So shelter is actually an issue. But if we go up to the energy, to the general statements, look at this. The index for gasoline was by far the largest contributor to the monthly all items decrease. So if we extract from the equation gasoline and energy and crude oil, we are actually bad. That's core energy. That's core CPI, sorry. So due to this decrease in energy and gasoline, that offset the increase in shelter index. But we are actually bad in the core CPI. So what will happen now if energy starts going up? CPI will also increase next month. So we have to take a closer look to energy, because if energy goes up, there will be no offset anymore and inflation will go up month over month. That's key to understand. We are not good with this kind of moves. Natural gas. After this sell-off, in December, this was part of why this decrease did offset the increase in shelter and general service CPI index. This is why we are. But what will happen if this continue higher and we break out 93 on the XLE sector fund, energy fund? January 2023, this month CPI next month, when it will be reported, will be actually bad. So follow up on the energy sector and take a look. If this goes up, the overall sentiment will not be that good. Crude oil is also going up. Higher low. Remember, US government is buying at $70 per barrel in order to fill again the strategic reserve petroleum. So this was acting as support. We went up, we pulled back, and we are now doing a higher low. So crude oil is also trying to build some momentum to the upside. Be careful, energy is not done yet. And apart from that, core CPI shows that food, shelter, transportation, medical services are going up. So this is why I was bearish on the day. You have to take a closer look to the report and stop following mainstream media recommendations. Do your own research and just analyze the data. This is all I can do for you. For me, I was not expecting this. I thought core CPI and food was going to be lower, and I was quite surprised actually. But you have to be prepared for both cases. I tried to build a short here, I got chopped out, I went long, and once we couldn't hold hot high of day, we started chopping around and I went short 11,500 and I just took profit down here. We are ranging in this. This is a mixed sentiment price action. This is not clear anymore. So be careful. The trading day is not over yet, and be patient, because I don't think today is a big day to be aggressive when these news are good and bad at the same time. Good because inflation is not going up as aggressively as it was before, but also because core CPI is still there. We have sticky inflation in the core indexes. So be careful with that. Dollar is actually doing what I was expecting, just trying to build, look at this, trying to build support in this huge trend line. We are just right there. So I expect dollar to find some kind of buyers down here, or maybe in these levels, in this range above 101, and try to curl. So interest rates, well, looks like bond markets are buying these news. They are actually decreasing because they think that Feds will not hike as aggressively as they were doing as of right now. So this pulling back, the 2-year went down 4.1%, and the 10-year is 1.70%. So Looks like bonds market is trying to show weakness, trying to pull back. And let's see the federal terminal rates. April, look at this rejection. April went lower 4.8%. So in April, we are expected to see 4.8% interest rates until September. This is September futures. And in December, we are seeing the same interest rate cut that markets are pricing in that Feds said that they are not willing to do. Fed said on the press conference that they were aiming, the goal was 5.1% in 2023, but markets are not buying that. They think that Feds are not going to raise that much and only will aim to 4.8%. If we check what analysts are expecting, if we check the FOMC CME, cooling inflation, look at this. Dow climbs 200 points after December CPI report show cooling inflation. Yeah, sure. These are the kind of things that you need to investigate. You need to go to the details and understand that this is not like they are trying to show. So 93% of analysts are expecting 25 basis points from 425 to 450. So we are going to be in this range, 450 to 475, and that's why we see in the bonds market, we see that April is going to be 4.8 because they are expecting that in February, Feds are going to raise 25 basis points to be in this level. But what will happen if, as I was mentioning earlier, what will happen if energy goes up and January 2023 shows inflation again going up? Well, that will show the Fed that they continue to raise, they need to continue raising. So after this 25 on February, we might be again raising 25 basis points in the next time, reaching the 5% interest rates terminal rate that Feds are willing to take. So there's a lot of information to digest. There's a lot of data to analyze, but be careful because things are not as bullish as they are trying to convince you. And that's all. I think that's the thing that I wanted to share with you. Don't be naive, be smart, and follow your own research. Do your own research, review the data, and just take your opportunity to do a deep thought and try to not follow others. And apart from that, all mainstream media is not the ones you need to follow. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time as always, but remember the trading day is not over yet. Discipline and risk management are key for success. Stay safe, everyone. Do your own research. Look at this. This is expected. This is expected. So stay safe, everyone.